Hi, this is John Coumarianos. I'm an analyst for Real Investment Advice, and I published an article on the website today on bubbles. It was a comment on a research paper published by Research Affiliates, which is an investment firm in Newport Beach, California that we like very much. Research Affiliates defined the bubble, an asset bubble in this article, and they said, what is a bubble? Bubble is when you buy an asset where the known return is going to be low, and you buy it just because you think you might be able to sell it to someone else for a higher price. So there's no real economic value there. You just hope you can sell it to someone at a higher price. And Research Affiliates thinks United States stocks are very expensive right now. And you might ask, well, how do we know if an asset or like a stock or the stock market is expensive? Well, there's a great metric called the cyclically adjusted PE ratio. Let me show you what I mean. This is a chart of different countries, different regions in the world, and this is their PE ratio, so the current price relative to the past 10-year average earnings. You can see a lot of emerging markets countries down here, Turkey, Poland, Brazil, have low PE ratios, so you're buying them at a cheap price. Way up here are the expensive countries, and U.S. large cap stocks and U.S. small cap stocks are at the top of the list. They're the most expensive stocks in the world right now. They have the highest PE ratio. The U.S. stock market right now, the S&P 500 is trading at above a 30 PE ratio right now. So you know you have a high level of confidence that you're locking in a low future 10-year return when you buy stocks at prices way up there. Research Affiliates recommends when you see a bubble, get out of the way. So you don't have to own a whole lot of U.S. stocks in your portfolio, and you probably shouldn't when you see metrics like this. Now, a word of caution. The cyclically adjusted PE is not a crash indicator. We don't know because it's high that the market's going to crash tomorrow, next month, or next year. It's not that kind of indicator. But we have a high level of confidence that the next 10 years will deliver low returns to us if we invest in the S&P 500. Take a look at that as we go to the next slide. We can see that U.S. stocks are poised to deliver low future 10-year returns. We have two bars here indicating that. The blue bar indicates just nominal returns, and the orange bar indicates those returns with inflation lopped off, about 2% lopped off. You can see U.S. stocks, large cap stocks, are poised to deliver about 2% for the next 10 years, or really almost nothing when you factor in inflation. Small cap stocks slightly better, but not much, maybe getting close to 3% or 0.5% inflation adjusted. The world stock market, probably close to 5% nominal, 3%, 2.5% to 3% in inflation adjusted returns. And way over to the right, foreign stocks look better. EAFE stands for the EFA index. That's developed country foreign. That's up at around 7% nominal. That's a nicer return. In inflation-adjusted terms, we're getting close to 5%. The best stock markets in the world, meaning the cheapest and the ones offering the largest future returns, are emerging market stocks. The blue bar is up to the 8% line here, according to Research Affiliates, according to their analysis. And inflation-adjusted, that's getting over 5%, close to 6%. So, a lot of studies get done and they show U.S. investors are kind of skittish about owning foreign stocks. This is really the best argument to own foreign stocks right now. They're poised to deliver the highest returns. Emerging market stocks, we should say, come with an extra dose of volatility, no question about that. But if you've got the staying power, you can wait it out for 10 years, you're likely to do better in emerging market stocks than if you own the S&P 500. So if you see a bubble, get out of the way and go where there's not a bubble. And right now, that probably means overweighting your portfolio in emerging market stocks. This is John Coumarianos for Real Investment Advice. Thanks for watching.